But Sanai, thanks so much for your time. I mean, I'm just looking at this report, 10.7 billion rand. That is the amount of net outflows in the first week of October alone. Question is, what has this been a function of, and is this something that we should be concerned will continue?
Okay, so from a global perspective, as you follow, there are some recession fears that are being triggered really by things such as the US and China, trade wars, and also some of the issues around Brexit. So we're seeing that investors, mostly those that invest in global emerging markets, they're now shifting their focus, and some are actually looking at safe haven assets such as gold. So really that has sort of affected frontier markets such as Zimbabwe and other markets in sub-Saharan Africa. However, is actually outlined in our note, we see that there are also certain country-specific risks that apply to Zimbabwe. What we've done is to do a risk assessment of Zimbabwe, and we came up with about 5 key risks that are really affecting frontier market investors. And one of them, of course, being a political risk. We also see foreign exchange risks. We also see repatriation risks, expropriation risks, and consumer sentiment risks. So those are the risks really that continue to affect investors, and as a result, we're seeing net outflows.
And net outflows, and despite the 5 key risks that you have mentioned, I mean, the amount of money coming into Zimbabwe has been on the decline in recent months, in fact this year, but yet we still have quite significant flows still coming in. I think about $1.1 million in Zimbabwe currency in the month of September. So my question is, where is this money going?
Okay, so you then find that when you then measure that money in real terms, it's a significant decline from what we used to see in prior years. But one thing that's worth mentioning is that those investors that have continued to stomach risk, they've continued on the market, but overall we're seeing them exiting the market through fungible stocks, and one of them is Old Mutual Limited. So we're actually seeing that they're using the Old Mutual route to exit. But what the government has also done to limit the flow of outflows to Old Mutual is to then come up with a lock-in period of 90 days, which means that any investor invested in Old Mutual has to wait for those 90 days. So really it has sort of slowed down the velocity of outflows. But generally we're seeing that risks in Zimbabwe remain quite elevated.
But talking about Old Mutual, I see that the stock came under a bit of pressure is it in the month of September, down 1% or so. Although if we look at its performance year to date, up over 300%. How has the situation here in South Africa, where the CEO is or fighting for his job back against the company on the grounds of an unlawful and unfair dismissal, how has that affected sentiment towards Old Mutual in Zimbabwe? And of course, following the recent resignation or retirement of the head of Old Mutual there in Zimbabwe?
Okay, so what has happened is that it has sort of increased what we call the arbitrage profit between Old Mutual on the JSE and also Old Mutual on the ZSE, simply because it's now cheaper to buy the Old Mutual share from JSE and then sell it in Zimbabwe, where the share price is actually quite high. So you'll be seeing that the arbitrage profit there is around 70%. So really, here in Zimbabwe, the way that Old Mutual is viewed by investors is viewed as a currency hedge, one, but also as an avenue to make a risk-free arbitrage profit. So really, the issues around corporate governance issues in South Africa don't have much of a bearing in terms of trading activity. In actual fact, they actually boost the arbitrage profit between the two exchanges.
And just finally, you're talking about the significant decline in the ZSC, especially compared to its peers here in the rest of the southern part of the continent. You describe it as for those who are looking to go long, now is the time to get in, given the significant discounts. All right. So if we believe you, get in and through who, and what's the potential value add that lies in store?
Okay, as outlined in the report, I think the share prices in real terms have come down, which is quite significant, especially when you then use the market market cap to GDP ratios across the industry. So we're seeing that there are well-managed companies that have continued to generate real cash. I'm talking about companies that actually export products internationally. You're basically looking at your Padengas, your Ariston, they do horticulture. Padenga, they focus on crocodile. We also have certain companies that have a regional feel around them. Your Sipisa brands, that's one that's actually doing well in the region. We've got Seedco Limited and Seedco International. Companies that have a regional feel, but also have potential to export. Because right now, I think the key risk in Zimbabwe is around foreign currency shortage. Having a long-term position in some of these well-managed companies definitely yields value for long-term investors.